Welcome on, guys. Welcome on. Welcome, people. Welcome on as you're coming in. All right. Good to have you all on. Welcome, everybody. Get yourselves in. Start in a few moments. All right. So let's crack on. I'm going to kick it off by showing you the account. So here's the account update here. So at the moment, I've turned £120 of profit. Well, it was £100 at the beginning of the week. Now it's 577. Just to recap on USDCHF, so the target's not hit yet. We still have some milestones to cross on the upside here, which I know the price will get to sooner or later. Right, USDCHF has been an up struggle long, and I think the bullish sentiment coming from the Federal Reserve is helping that. And the price just crossed what I call escape velocity, if you want to call it that. You can see that since the entry of conception that we were talking about, it's been an uphill struggle. Now we finally got over 100 pips, but you can see for the last few days, at least 6 days, it's been an uphill struggle until now where we've seen an injection of liquidity finally, But in essence, what we're seeing in the market here, we have quite a bit of activity, going forward. So for me, at the moment, the price hasn't hit its target. I might drag my stop losses to even. Now, if you're wondering what these two lines are on the top here, it comes from this H1 zone. So I just kind of went back in the price a little bit just to have a look at what's going on. If I go right here, I'm going to pull this to the left. But welcome as you guys are coming on. So to the left here, there's one supply order block here that the price has returned to, historical one, which is where the price is operating from at the moment. So these two lines here represent just a barrier. As soon as the body of the candle, which I believe it has, closes above this H1 order block, there is one more pool of liquidity here, and then the high of that day is just above. So our stop losses are not too, take profits are not too far from here. Now, when the price gets above the high, I might just close it because we've already kind of done the job in terms of USD CHF. That job is done. On the other hand, with gold, there was just a re-entry here that I just gave out. The price is dropping to. Now with gold, due to the economic conditions that we're in right now, if you guys can remember, if not, I'll go through the history. We had, that situation where, let's go, where the price dropped from where it is to about, well, in one day anyway, we had a drop from 1762 all the way down to so about 1680, something like that. Right now, this was market manipulation at its finest because it happened as soon as the new week started. So because there's such a set of pool of liquidity beneath this order block here, I do believe that gold is going back down to these lows here. So I am expecting a short. So I'll be holding this short. I may have to swing it. So far, the algorithmic price points that are marked out here have played out quite well. But in essence, I'm going to be very intrigued to see how, the price behaves moving forward. The price is dropping as it should. Okay. Final entry was really here at this algorithmic order book here, price point. And I think we should be seeing a very strong short from gold. Now, there was a pullback, of course, because the low of gold was taken as the price went here, but we do have a very strong bearish outset. Now, even though the price is doing this strong bearish outset, I was saying this earlier on my other channel that, when it comes to the markets at the moment, fiat currency and cryptocurrency are head to head in a very strong war, okay? Which I believe the outcome, the winners will be crypto in the long run. But the whole entire economic system of the world is under attack in a positive way, I believe, because reformation and change is necessary. But at the moment, we're in a situation where, fiat currency is at war, especially the dollar and China are at war with cryptos because it's removing the power of those two major superpowers in terms of economic power to manipulate, control. A lot of the Western world, if you haven't realized, do live in a system of debt. We live in a system that has debt cycles to it. Now, I don't believe that economics was designed for there to be debt, but one way or another, I believe that economic systems have to come back to what they primarily were in from the beginning, which was backed by some sort of gold. Now we have digital gold, which is Bitcoin, and we have physical gold, which is gold. Both have scarcity, both are good stores of value. Of course, Bitcoin would be better because it's digital. But nonetheless, when we look at what we have going on in the markets, the overriding factor controlling the price at the moment is the dollar, because as I was saying again on my live session I did on my channel, my personal channel, Money Mikes, we're seeing that Bitcoin and gold are both going in the same direction. Now, if we talk about macroeconomics, first of all, at the moment, we're having a shift in so many different levels. At the moment, there is a correlation between Bitcoin going long and gold going short. And the reason is because, now think about this, gold is a store of value. Bitcoin is also a store of value, okay? They both are stores of value. One is a digital form, one is physical. Now, as awareness of Bitcoin and the potential of it and how important it crucially is important to the future of civilization, okay? And I know I sound like a Bitcoin maximalist, but I'm a crypto maximalist, but Bitcoin is very essential to life. Now, there is a shift. Now, a lot of the money, okay, at the moment, 2021, 29th of September, is in the hands of what we call old school money or legacy finance. A lot of the older generations who have made their wealth, who have the millions and the billions, is locked in the old system of fiat and gold, okay? Not a lot of that money is in the new system as of yet. So in terms of correlation, because Bitcoin is a store of value, high net worth individuals who understand the monetary system of fiat money understand that essentially if they hold all their wealth in cash over time, they're losing wealth in terms of buying power. Okay, not nominally, but just buying power. So holding cash is not a safe way to store their wealth for generations or have transgenerational wealth, as we discussed. Okay, Bitcoin or gold will be, adequate for that. So if you think about this physical way of holding wealth in gold, the correlation is Bitcoin goes long, gold goes short, and vice versa. So when the price of Bitcoin goes up, the price of gold goes down. Not all the time, but there is a noticeable pattern. And the reason is because we're shifting from one era of monetary system to another in terms of stores of value. So for that reason, we see this correlation. But at the moment, okay, when we look at the price of Bitcoin and we look at the price of gold, I'm on the M5, and here I'm on the M15, I'm going to M5. Both of them are going short, which means that at the current time right now, if you want to understand, what's going on with macroeconomics, what we're actually seeing right now is not anything to do with the shift of money from old to new. At the moment, the US dollar is having what I call another artificial strengthening. And I can prove it to you in the fact that if we go to the dollar index right now, you can see that the dollar index from the time I gave you guys this call right here, once I saw this price action here, very tiny, I knew that we're going to definitely have a dollar strengthening. Now, there is talks of a tapering going to happen. Seems like it's 2022 Q1 or Q2, or it might even be Q4. All right. Now, when we get towards the ends of months, guys, and the beginnings of months, there's always a shift in money. All right. Now, how I trade based on the money that's in the market, the liquidity in the market order books. Trend lines can't help you in 2021. Okay. You really need to understand the market order book and how the algorithm of the market works, because it always updates itself. But for now, anyway, we can see that the dollar is on a very strong bullish course, all right, which is making all dollar-denominated assets lose, I wouldn't say lose its value, but just become cheaper to buy, compared to the US dollar. And I believe this is going to continue for quite a while. This is hence why I'm in USDCHF long at the moment, and I'm in gold short due to this pair correlation. And in fact, Bitcoin, when I did give a shout for Bitcoin short, the entry was from a 30-minute flip zone here. And we talked about flip zones a bit on the channel here, but it was from this 30-minute order book here. So stop loss goes above the zone and the rest is history. But they're all moving short, which means that the main overarching factor or driving force at the moment for the price here is the dollar index. Okay, someone says you're absolutely wrong. The trend is deflation. During deflation, you buy the dollar and sell your assets. It's basic economics. The XY is going towards 105 by the end of the year. I understand. I'm not saying that there isn't any deflation. Of course, it'll be deflationary, because if there's going to be a tapering, well, then of course, the less dollars in circulation, the supply decreases and the demand increases. So I understand you. I'm not saying that it's not deflationary, but what I'm saying right now is we're not what we're seeing in the market, the dollar strengthening, is artificial, and is, I would say, for maybe the next 2 or 3 years, we'll see some strength in the dollar. But I think you misunderstood what I was saying, but I will continue. But if you have any questions, it's nice to hear you guys commenting along. I believe the DXY will probably go to 105 myself. If I get to the DXY here, let me see this. So for me, the reason why, I agree with you on the 105. Put this up here. When I look at the price action above here, we're at 103, and the price has equal highs here. Now, for me, I believe that there would be a lot of market orders above this high. And so most likely the price will continue to about, for me, what I have marked out is 106 right here at this supply zone to the left. And then from there, we'll see where the price goes. But I agree, I do agree with you in terms of what we have going on deflationary. It's a necessary step, because the overarching fundamental of COVID, we had a lot of dollars printed. And so one of the ways monetary policy can control what we have would be for a tapering to happen. So this is why I'm going to continue with the dollar and see more strengthening on. And we should see the dollar, we should see gold continue to short, and we should see USDCHF continue to go long. Now, the price may do more than what I'm expecting, but I'm just looking to see what the price does when it gets back to this region here. If there is a continuation trade, then I would go for it. If there's not, then we'll see. So for me, looking at everything that's taking place at the moment, we have great opportunity happening in this last cycle into Q4, and the shifts of money that are going to happen. I do believe that there will be great opportunity for all of us. Okay, now by the time I'm done with these trades, I would definitely be looking into more I'll say dollar style trades for the moment, until further notice, until the end of the year and into 2022. All right, let's look at the rest of the market. I hope you guys followed up on our weekly breakdown. If you haven't, please go and check it out afterwards. But let's just have a look at a couple of things here, and then we can take it from here. So now, actually, let me open up the floor, because it's good to hear you guys. I see a few of you guys on the live. Are there any pairs you guys would like me to look at before I continue with what I'm saying at all? You let me know. If you want me to look at any Forex pairs at all, or some commodities, I don't mind looking at it. Let me know. If not, I'll continue. Yeah, okay. I see. So Absolute Zero says, I'm also long on USD CHF, by the way, and short on gold, since Swiss franc is anti-gold and anti-gold instrument. And they're inversely correlated. That's a good point. That's a very good point. There are many factors to it, but I do like your Absolute Gold, and I hope we can talk more. I like how you are. This is nice to hear from you guys talking about. Yeah, so in essence, looking at the price action that we've got going on here. Now, speaking of the Swiss franc, there is something that I've been discussing, and I still want to go through again. So I'm going to pull up Swiss franc Japanese yen for a moment. Now, as we know, guys, with Japan, the nature of the Bank of Japan and as a defensive currency as they are, we've discussed it in deep detail. Their GDP is highly weighted with their exports. It's an exporting country. And so in order for them to stay lucrative, and the currency, I should say, to stay at a good level for international trade, there are quite a few opportunities using the Japanese yen with the Swiss franc that I would like to go through. So I'm going to quickly go through that. If you guys have anything you want me to look at, please give me a shout. I don't mind. Okay, make sure you give me as much as you want whilst I'm here, because I'm here to serve you guys with whatever you want me to discuss. Okay. So, all right, let's have a look at this then. I'm going to have to remove the terminal for a minute so that I have more space. So just hang in there. Okay, so Swiss franc Japanese yen. Now on Hugo's way, you know what? Let me use the funded account instead. That might be a better idea to do. Let me put this here. Give me a second. I'm going to switch over to that because I think it'll be a little bit better. Now, I'm using my funded account for a moment because this funded account, thank God, has institutional liquidity. So Swiss franc, Japanese yen looks a lot better. The reason why I switched over, if you didn't see that, on the new day that we've just had, there was a 100 pip spike, which is not present on what we have here. So I'm going to switch here. Let me just go through Swiss franc, Japanese yen, and then we can discuss some stuff. So again, just a bit of a history on the price before I continue. If you've seen the videos for it, then I'm sure you probably would know what I'm on about. But anyway, let's put this here. So Swiss franc, Japanese yen on the monthly time frame here. We have this monthly order book here, or order block, excuse me, the demand zone where the price went long. Now, 2015 history, we have the Euro Swiss franc peg, which was destroyed by Switzerland for good reasons, which one day I will do a full video on as to why. But for the moment here, this demand zone was part of the reason why the price went long. We see a return later on in that year, but the price used this order block to continue going long. Now, once we had the break beneath here, this demand zone became a supply zone. Now, it's taken about 7 years for the price to get here. And in these 7 years, we've had a return back onto the other side of this order block. Now, if I go down to the daily structure here and we look at the price, I want you guys to follow me and you guys can share your comments. I'll be glad to hear your opinion on silver. For me, buying starts at 20.50. Okay, cool. No problem. I'll have a look for you, sir. Luca, nice to meet you. Okay. So Swiss franc, Japanese yen. If we look at this month here of May, I'm going to use the crosshair on MetaTrader. The crosshair is about 35 days approximately, 34 days, including this candle here will be 35, where the price gave us a bullish run from about 119.259 all the way up to the 122 mark. All right, now after we had a reversal signature right here, the price gave us a very strong short, which it took about 3 days for the market to come back and fill out the bullish run that we've seen. So in essence, the bears have scored points in 3 days for a 35-day long move, which kind of shows you what side the market order book is on at the moment, even though there are longs and shorts. But because we've had this flip on the monthly time frame in a historic order book area, an order block area, I would be very, at the end of the day, this is not financial advice, by the way, but at the end of the day, personally for me, I'm looking for a very strong short. Now, the order block responsible for the short is here. And I am expecting the price to give us a return back into this area because we have had a break of market structure. There's several, I mean, I don't use trend lines to trade, but I can even use this swing right here. This swing low right here, we've had a very strong market structure break beneath the area. And I would be looking for a return. I do expect the Swiss franc to lose strength. I mean, as a country, we went through the economy of Switzerland last time. So if you remember what we were discussing, Switzerland as an economy, 76, well, yeah, about 75 to 76% of their economy is service. And most of that is the tertiary sector of service. Okay. It's not an agricultural country due to the geography. I mean, there are things like Swiss cheese, but it's not enough to really make the GDP where it is. Okay. And then the other 24 to 25% comes from manufacturing. Okay. And I've left the link in the description in the previous video about Swiss franc, Japanese yen. Now, the price overshot a bit further than where we wanted, and it's come to this algorithmic level point here, and the price has validated the short even more for me. And so what I'm expecting in the days to come is probably in Q4. Now, due to some of the stuff that are going on with COVID, Switzerland as a country, let's think about the economy for a moment. It relies on imports for it to be able to produce the services it does to a great amount. Of course, there are a lot of companies. It is a tax haven, so there's many large companies which are in there which help the economy to do well at times. But essentially, the COVID restrictions, issues with shipping, supply bottlenecks, basically, will affect Switzerland very quickly. Okay, and so I'm not saying I'm banking on that, but I do expect that to continue as we go into Q4 because there's still a lot of uncertainty around this time that we're in now. In the short term, I do expect to see Swiss franc, Japanese yen, give us a long at some point. Okay. Once it gets here, I'll be looking for a short. And I am expecting, it doesn't have to be an earth-shattering short, but this order block here has taken 7 years for the price to get here, and it's flipped to the other side as supply. So I wouldn't be surprised if there's major moves that even go all the way back down to just around about 101. I think so, personally. Now, I'm not saying it's going to do that in one move, but we may actually have that. Or we may just have a much shorter move and maybe go for some of the lows of 2020 here or even below that. But all I can see from what the market is kindly showing us, I do think we have a great opportunity here. Jerome Powell said something meaningful. Jerome Powell, at the moment, when I went over to YouTube to find what he actually said, the video was from the last comments he made on the 24th of September. I'm not too sure why there's no live stream right now. Jerome, he hasn't said anything. Only the 24th about the pandemic recovery and the housing sector stuff that he discussed, but nothing apart from that. So I'm trying to work out where that live video is. I haven't seen it yet. If I see it, I'll do another review because I was actually going to play it live, but I haven't seen it. But from the update of what he said last time on the 24th, I wouldn't say he said anything meaningful. It was more of a forum. He wasn't doing much talking. He just gave some concluding notes about how to help, sectors of the restaurants and hotels and just different things of that nature. But if I find anything, I promise you guys I'll be the first to know. And please let me know what I can do to make this channel better. I just want to be a servant to you guys as much as possible. So if you see anything I can do better, audio quality, whatever it is, just I'm not a person that gets offended. So please let me know. Okay. But I'll definitely give you guys an update. Okay. Now let me take a look at silver and then I'll be out of your way for the day. So Luca asked for us to look at silver. Now, unfortunately, on this funded account, you're not allowed to trade commodities. So I'm going to have to switch back to Hugo's way. Let me do that quickly. Let's see. Silver. Here we go. So silver is following the same course. And this is what I'm saying. As the dollar is gaining strength across the board, commodities or any asset class that's dollar denominated, due to the deflationary measures in place, we'll see some drops. But this is only temporal. I think we all know eventually where all fiat currency ends up, okay? But that's not the discussion for today, so let's just leave it alone. But for me, I've been looking at silver for quite a while. I'm going to start on the monthly time frame here. Let's put this out here. So from the monthly time frame, looking at what we have with silver, coronavirus provided a very good opportunity and excuse for stop loss grabbing. There were many pending orders, sell stops, and different types of liquidity and orders beneath these lows from spanning all the way from 2015 to where we are now. Now, in order for us to have a confirmation of that, we need some sort of market structure break for the market to confirm a change of direction, which we had right here. And then we had a reversal signature this year, which I believe is the pullback mechanism that we need in order for the price to return here. So for me, I do believe that silver is a strong short. Okay, I have buys set up to buy physical silver because I do believe in silver, especially in the years to come, is going to become very necessary when it comes to things like green energy. But for the moment anyway, there's a liquidity gap on my chart, which is showing up on other brokers too. Now, I wish I had the institutional liquidity from the funded account to be able to use, but unfortunately, again, I can't see silver or view silver from that institutional liquidity, because that would have helped to see if the gap was just a price feed issue or if it's a real liquidity gap. Maybe I may use TradingView in the future for that, but moving forward, let me see what, okay, here we go. I expect the price to pull back to around here. And if possible, we may even get a cheeky return back into this principal order block of where the price gave us this stop hunt grab, if you want to call it that for now. So my lows, I'm looking for probably silver to even get down to 15 potentially. All right, that's the lowest point. But taking it a bit higher up, there are a lot of supply zones to the left that the market could reoptimize for demand. All right. But essentially for me, I would say if I was to put this in category here, we have one supply order block here, okay, which is also a bull trap too. All right, we've seen the price returning here for supply. We had the price cap from 2016 until we had the break past in June, that massive bullish month. So if the price returns in here, which is just at 20, or the top limit of it is $20.25. So not too far from what you said, Luca. That would be, if you're looking to buy some silver physically, this is not financial advice, but that would be a good buying range that I can see the price doing. If we have a body close beneath that, but we have to wait a whole month, unfortunately, if we're going to know for sure. But at least if the prices break into the next area, then this range of accumulation. So we had a redistribution of liquidity here. We had other accumulations, but this redistribution here is important because if you notice, it's just before the coronavirus drop. So over here, I would expect possibly a return, specifically of this supply zone here, which is where my next target comes for around about 17. Okay. And then finally, if anything, back to the principal order block before the price continues for the new direction long, I'm expecting of, a very strong bullish set of years in the future. And I think with the economic conditions that we're seeing, sooner or later, more money is going to shift into commodities like silver and gold. And of course, digital stores of value too, like for example, Bitcoin, simply because of the effects of COVID that will appear in 2023, 2024. Okay. Now, silver, my background, if you don't know me or you haven't heard my background is in chemistry and my master's is in pharmaceutical science. So if crude oil goes to -40 like nothing happened, then silver can easily go to, yeah, I agree with you, definitely. I definitely agree with you. I think for me, in my background of chemistry, the difference between gold and silver really comes down to the chemistry, of course. But of course, because gold is inert against almost every substance, I mean, you could theoretically say like a super acid, but in terms of a store of value, if you had gold from 2000 years ago, so long as it doesn't get destroyed by war or something like that, and you keep in the same place, it shouldn't lose any of its elemental form or value, because the half-life for gold is in the hundreds of millions of years. Okay, and now with silver is not completely inert. Silver actually, due to the structure of the element, does react with sulfur and air over time. So if you have some silver, if you leave it for a while, you notice like a greenish tinge on it. Now, because silver, some people do use it as a store of value, but I'm more banking on silver rather because of the shift that we're going into more green energy, because silver at the moment is being used. And if you notice, you can go and check this out. A lot of companies who use a large amount of silver never talk about how much silver they actually buy. That information is always classified because they don't want the price to spike, because the actual demand for silver is not very clearly seen on the charts. It looks as though silver is just silver. Okay. Now, silver compared to gold hasn't, made a new all-time high. We saw a new all-time high for gold of about 2,075. So me personally, looking at silver, I see it as a long-term hold for the future. If you want to trade silver though, I definitely go for a short right now, as the dollar is having this artificial strengthening. But Luca, this is what I'm looking at for the price. And I think the structure we can see here is clearly a bullish structure here. So any of these points would be great buys, whether you're buying physical or whether you're going for some trades. Okay. And if I bring it down a bit further here, now I gave this out to my academy students a while back, but there is a demand zone here, which was a price cap that we've seen since 2020. Now we've just broken past that price cap here and we've had a return on the other side, and now the price is pushing short from here. So the next target, if you're in a short or you want to take a short, I would suggest to go right here. The last major institutional sponsorship on the price is this region right here. So we have a void of liquidity, which the price is filling out now. It's halfway there. All right. The next algorithmic level on the price order book is about 21,321. So you can never forget that, because it's literally 321. And then from there, the price should continue. So I'll quickly give this to you so that you can use it as you wish. let's go to the 15-minute. I see a comment there. So the price is gently making its way down short. I would say if you were going to trade this, some sort of pullback will be good. I don't know if the price will do this on the 30-minute, but I'm seeing another price cap that the market made from last week. I actually wanted to take this short myself, but I chose gold instead. Now, if for any reason the price was to give us a reversal back into this area, that could be your entry. All right. I do think that the price may overshoot a little bit to the supply zone, but this would be something you could use. So let's see what happens with the price action. Let me see the comments. I hope that helps, Luca, if that's useful to you. About chemistry, last week I was checking if gold can be made somehow in particle accelerator, but no, it's made in super. Yeah, too bad for me. Can't reproduce on Earth. I really like Absolute Zero, you're funny, man, or lady. I don't know, but you're making me laugh. But yeah, it's true. You can't. I mean, yeah, you can't. Supernova collision. At the moment, I saw that they're trying to. Apparently, they're trying to start space mining. I saw that NASA is trying to send like some sort of spacecraft or automated spacecraft to monitor, some asteroid or something like that. Very interesting. Thank you. I agree. I see the value linked to industrial use, store of value, different story, and gradually okay. No worries. Okay. Well, all right, guys. Well, I hope you guys enjoyed. This is the first time you've been on the live. Definitely please give me a thumbs up. My other channel is the Money Mike's channel. Okay, I just started out YouTube quite recently, but I just want to be able to share and share it with your friends. I'm live every day at 5, Monday to Friday on here, and 4 o'clock on the other channel. So give me a follow. If you have any suggestions for improvement, please leave them in the comments below. I hope you guys enjoyed that, and I'll catch you on the next one.